Big week ahead. Fed and US jobs. The Fed 25 basis point hike, accompanied by a hawkish Powell pushing back against sentiment of a pivot that's been priced in for halfway through this year. The dot plots are saying otherwise. They're talking about a target rate of above 5% into 2024. You've got a tight labour market, so it's hard to see wage pressures coming down. So I fully expect Fed's Powell to start pushing back. I mean, you've already seen it from other commentary from Fed officials and so forth. So I think the market has priced this wrong or correctly, depending on what side you're looking from. But I'm talking about coming down to go back up. So that's how the market works. So it's doing that effectively. So you've got this bottoming formation here. It could be a potential V bottom being put in on the weekly chart. You've got these prospects of a move up into the 50% area to touch last month's lows and exceed it, with some stop hunting going on above there. But you could potentially see this be coming down up to go back down and to move lower towards the 100 mark. But we can't look that far out. So, but anyway, that's a thesis. We've got this trend line that would be pretty crucial if we get above that at the end of this week for a push higher. But for the outlook for this week, then you'd be anticipation of that trend line giving out, and we'd be looking for a test of 102.50 um, for the outcome of the non-farm payrolls and the Fed, and potentially much higher, just depending on how things play out. So my thesis is for a higher dollar for this week. Could be completely wrong, but we don't trade on the back of a hunch, and we look for setups throughout the course of the week, taking into account sessions and days and the price action and structure as we go. But that's just an outlook from my point of view for the week ahead on the dollar. And then if we were to move over to the Aussie, if we go to the FX Street website, I've posted this in the news section. That's the title. You can pause that and write it down and look it up. But I've got a thesis here for a lower Aussie for the day ahead. So I've written that on the 1 hour chart. We've had plenty of days of up. And then on Friday, we had our first red day. So you'd expect a continuation of that correction into these in the money longs, starting with today's initial balance. No idea how it's going to play out, but the nature of markets, you'd expect there to be a scenario where we're moving lower, potentially into London for a rally up in London, and then for the counter trade to the downside. So that's where I trade the New York session. I'm hoping for the market to come up high. You see, we've already broken structure with this move here, which occurred on Friday. So here is the structure. We've got a break of that structure with this move, and we've had the pump up from there, and then we've had this dump taking place at the end of the New York session, and we've had this bearish opening gap, the price now below the 20 EMA, and a recall of that. But this is a support area, so it will take a few more attempts to get below here. It was an inside day on Friday, which is very important. So you'd expect there to be a break one way or the other, either higher or lower, and the bias for me is to the downside, given this template that I've explained earlier, and the bias for the downside. So that's where I'm at with the Aussie. It was the strongest performer last week, with the RBA tightening expectations, picking up. We've got the RBA on the 7th of February next week. There's 80% odds of a 25 basis point hike, and the swaps market are pricing a peak policy rate near 3.9, up from 3.55% at the start of last week. So very hawkish sentiment surrounding the RBA, given that inflation readings have hit new cycle highs. So that's something to bear in mind. But if we're headed higher in the Aussie, then we've probably got to come down before we go up. So that's the thesis for the week ahead, especially into the Fed. A hawkish outcome from the Fed should see a breakout of this consolidative range to target below 70.50, perhaps towards the end of the week if we don't get there sooner. But for the day ahead, or at least for today and Tuesday combined, then 70.50 is vulnerable, and I'd say it will probably come in the US session, I'd expect. Um, so that's my pick. Now, if we were to move over to the yellow metal, then as usual, I've done the chart of the week in the analysis section on the FX Street website under latest analysis. You'll find that. So you can pause the screens. That's the title to look up. Trapping longs for a significant squeeze ahead of. Hold on a minute. Sorry, bear with me. That was last week's, but that actually did play out quite nicely. Bear with me. Let me get this week's. Yeah, same theme really. Trap balls into the Fed and non-farm payrolls. So that was last week's analysis playing out to some extent, at least, and it went to target or thereabouts and started to move into this consolidative scenario again. So we've got trap balls on this breakout attempt and towards the 1950s. Now we're back onto the backside of the trend, so potentially moving up to come back down. Um, I talk about this in depth in the article, but you've got a 100 pip box below important levels, which this market can dip into. So depending again on the outcome of the Fed and U.S. jobs. But if you want to take a look at that article, I mean, we've got a number of um, things playing out here. Really, you've got developments which are really enticing me to believe that we're on the way down for the days ahead. You've got bulls trapped, like I said. You've got the breakout longs um, being capped. You've got this move, this three-line strike, if you like. It's not quite eating into all of these, but it's a very strong move into this length. So it's broken this trend line. You can have a move up to come back down, as signified by that arrow, with 1925 as a very key structural support, and so forth. You've got last week's low as a target as well, and then you've got the December highs all the way at the bottom of this box in a 1825 1000 pip box to be targeting into. So these trend lines are to be eyed and taken note of for breakdowns of that as we progress through the week. And lastly, you've got the Bank of England and the ECB Thursday. The ECB would probably be the mover in terms of a broader um, collective effect on the market. So with the ECB, there are prospects of a hawkish outcome from the presser, with Lagarde um, potentially um, unearthing the guidance that we heard back in December for further 50 basis point hikes. You've got March and May meetings um, in that respect. So that could potentially cap any potential move in the dollar to the upside, slow it down a bit ahead of the US non-farm payrolls report on Friday. So we'll leave it there. Plenty we're getting on with, but again, trying to pick out levels on such a busy week ahead is a pretty tall order, and really we just want to be monitoring the daily developments per session, per day, looking for our setups for the session that we're trading in. So as I said, with the Aussie, for me that's quite a nice playbook, to come down, up, and to come back down again. The ATR on this Aussie is around about 80 pips, so I wouldn't expect much more of a move higher than 71.30 on the stop hunt and 70.50 on the downside, um, to fulfill the daily ATR. So have a good week ahead, and we'll do updates as we go, um, over on the YouTube channel there, per day, per trade, etc.